Oh man, an incredible reversal in the markets. We got a really hot jobs figure yesterday, but the markets decided to yo-yo back in the positive direction, finishing yesterday, Friday, up almost 2%, stocks and crypto here. Plus today, opening up with a bit of a doji candle here as the markets try to decide if we want to flip bullish or bearish. I'm also actively taking some altcoin trades right now. If you want to see what those are, jump into our Telegram group, ijaz.uk/TG, where you'll find out exactly what trades I'm taking and the TA and trade setups as well. Definitely check that out. Links in the description. You can trade with BitGet or Bybit, the two preferred exchanges I personally use. Now, if we take a look here on the daily chart here for Bitcoin, things are looking really impressive. I mean, let's face it, since the 1st of October now, a full week since we had this big 3.8% day, we managed to stay nice and above. We're nice and above our EMA ribbon. We didn't even come down to test it. And particularly yesterday, after what was a shocking jobs report, markets were initially low down. They came all the way down here to the lows of this candlestick at 27.1, but then closed the day at 27.9 again. It was incredible. And we saw the same U-turn happen in the traditional markets as well. In order to understand what went on and why that happened, we need to dig deeper into that jobs figure to understand exactly what's going on. Because initially when the jobs data come out, markets were expecting 170,000 new jobs. In fact, what came in was 336,000 new jobs. And that's why we saw the dump in the market and the original panic. But when you start to read the report in more detail, you start to see where markets were actually going, hang on, this isn't as bad as we think. Because let's understand something. If you damage the labor market, right? If you just damage the labor market, what happens? You end up spiraling the economy into a potential recession, right? If you damage the labor market. So what you want to do to navigate what is known as this soft landing is to bring inflation down, which is, of course, the objective of the Fed. The only reason we got steep interest rates right now is because they want to bring down inflation. So they want to bring down inflation whilst, in an ideal world, keeping as many jobs as possible. Now, that's the balancing beam that the Fed have to take. Now, historically, what you normally get is that labor has to show soft signs to bring inflation down. But what you notice when we look at the labor report in detail, you have to look at the bit that says average hourly earnings. And in that, you'll notice that the estimate was for wages to have increased 0.3% month over month. That's a 3.6% annualized rate, okay, of inflation on wages. And remember, if wages are inflating, people spend more, which creates more inflation in the economy, okay? So you get something called a wage price spiral. We've spoken about that plenty of times here on this channel. Now, that came in at 0.2%. Seems quite innocuous, right? But if you actually look at it, 0.2% month over month indicates a 2.4% annualized rate. So in fact, you've had quite a big fall here versus their expectations, which is a good sign for the battle against inflation. More important than this headline figures, which initially spooked us. If you then take a look at the other figure, the year-over-year figure, that was expected to come in at 4.3. That came in lower as well at 4.2. If we then look at the unemployment rate, that was expected to come in at 3.7. It came in at 3.8. So all the other figures hidden behind this headline figure of 336,000 new jobs was actually showing what we wanted to see, which is that wages are coming down. Therefore, that should help inflation soften a little bit. If people have less disposable income, that should bring inflation down because they'll delay purchases. If we look at the unemployment rate, that's notched up slightly. Remember, the Fed are okay getting to that 4.5-5% mark, right, to really soften the labor market. But the labor market's been so strong. So this is why when you look at it, the markets have gone, hang on a second, there's no need to panic just yet. And we saw that the 10-year government yield, which is your indicator of risk off, started to fall to the downside again and give up some of its gains. And we saw the stock market and Bitcoin start to rally as markets started to understand that. We also saw this cool down. This was what the markets price in terms of, are we going to get 25 basis points at the next meeting on November the 1st? This originally climbed up to 33-34% when that big jobs figure came out. Now it's settled down to 27%. So again, 3/4 of the market are expecting no rate hike in the meeting in 3 weeks, which is why we're seeing some joy in the markets here. So all that to say that Bitcoin is looking pretty damn strong here. It's looking strong. Look at the daily EMA ribbon here. The lighter colored lines are flipping now, right as we speak here. You're seeing the yellow line emerge above the red line. It's flippening, and this is a hugely bullish sign. Typically when this happens on the daily chart, we get a nice big extended move to the downside. This is really, really good, the fact that we've managed to stay above the daily EMA ribbon. Now, if we bring it to the 4-hourly chart, you'll see we're riding nice and tightly here above our 4-hourly EMA ribbon as well. We may want to call down, even if it wants to call down all the way into these levels, 27.4, 27.5. We've got plenty of room for it to have a leg to the downside and then bounce higher for a higher high. Now, like I said, eventually we have to break above this peak. Very important. Like, even if we come down here, a little higher high, come back down here, a little higher high, eventually we have to beat that, okay? Because if we don't, we could be curling over. We don't want to do that. We don't want to create lower highs. No bueno. And again, if none of this makes sense to you, ijaz.uk/TA, you can learn everything to do with TA. EMA ribbons, head and shoulders pattern, ascending triangles, descending triangles, all the things that I use to set up the trade signals, which I share in Telegram. You're going to learn that ijaz.uk/TA so that you can learn to fish. You guys can start to spot your own trades as well. If you do want to join my signal group, that is a private VIP signal group, ijaz.uk/TG, you'll find the information for how to get inside. We've got some open trades. I just dropped another trade alert as well, which you guys are more than welcome to take a look at in the VIP group. Check the link in the description for that. So Bitcoin here on the 4-hourly chart looking nice and good. Nice upwards trend here. Nothing to complain about here on the 4-hourly chart. We just need to break that previous peak. When we zoom up to the weekly chart, we start to understand what's going on, right? Which is that we're facing a bit of a decision week this week. You can see that the bulls had their moment, then the bears had their moment, and we've ended the week in stalemate. And it's exactly what I said all this week. What did I say at the beginning of this week? I said it's going to be a hugely volatile week to do with the jobs figure. And that's exactly what we got. We had one bit of figure on Tuesday, market went really panicked. We had a good figure on Wednesday, markets got excited, and then it was just a yo-yo all week based on jobs figures. But now, remember, the main story we need to see is whatever happens over the next couple of weeks here, hopefully to the upside, we have to break past 32. If we cannot get past 32, we are still at risk of curling over. And I need to emphasize that until we get past 32, keep this rally in check, that it is just currently a smaller rally, okay? If we can break past 32, then things are really exciting. We've got our higher highs, we can start creating higher lows as well, and we can start trying to ascend to the upside, right? Until then, you have to remember that there's a huge risk of a big head and shoulders, left shoulder, head, right shoulder if we don't manage to beat 32, and this can tumble to the downside. So there's still risk to play here in the market, but things are starting to look better. We're starting to get above our EMA ribbon. You can see here we're holding above it this week, which is fantastic. Hopefully this upcoming week we can start to build on that and get some green, break through 28,000, head towards 29,000 and start working our way upwards. That's what we want here in crypto. Now, of course, we do have to understand, is inflation about to rear its head again? The jobs market is still hot. That doesn't nullify that, right? It doesn't nullify the risk that inflation could start to come up, but it's a good sign that the wages were notching down a little bit. So there you have it, guys. That's what I'm seeing here in the market. Let me know, what are you currently doing? Again, if you want to check out our trades to actually build profitably in crypto, build your funds, build your account, check out ijaz.uk/TG, and I'll see you in the next one.